Okay, so we have started a lesson where we are going back to doing the income statement and the balance sheet, full income statement and the balance sheet, but this time we are including all of our adjustments. And what you will see is the adjusting entries, accruals and prepayments is one, bad debts and provision for doubtful debts is the second one, and the third one will be provision for depreciation. So in this lesson, however, what we are going to do is focus on the income statement. But before we do that, just a little review. Remember when we did accruals and prepayments for the income statement, what you had to do was add accruals and less prepayments to your expenses and your revenue. The balance sheet, however, dealt with current assets versus current liabilities, and you would have seen prepaid expenses, accrued revenue are your current assets, and current liabilities, accrued expense, prepaid revenue. And then for your final accounts with provision for doubtful debts, your income statement, we would have your revenue and your expenses, depending on whether it's an increase or a decrease in the provision for doubtful debts. And then in your balance sheet, you would have the current assets where you less the total provision for doubtful debts from your receivables. And then finally, we had the final accounts with provision for depreciation, and that would be in the income statement, just expenses, because depreciation is an expense, and you would put depreciation expense, colon, the particular non-current asset being depreciated. And then in your balance sheets, you will be dealing with the actual non-current assets, and you would have that the accumulated depreciation subtracted from the non-current asset to give you your net book value. But as we said before, we are not going to do both the income statement and the balance sheet in this lesson. We are going to focus on the income statement with these three adjustments. The first section of your income statement is your trading section. And the trading section, this section here in blue, is the same thing over and over again. So this one does not have any adjustments in it, except for, as I've said before, one thing, which would be the carriage inwards, because it is an expense. It is the only expense that is above here in the trading section. So you would have to do just like all other expenses and revenue, where you check any notes to see if there's an accrual or there's a prepayment. So when we come to doing the income statement or the final accounts totally, first thing that I suggest you do is look through your trial balance and identify the items for the trading section. That is what we are going to be doing first. The first part of the income statement, after you have put the name of the business, income statement for the period, and you're inserting the exact period, whether it's a year, whether it's 6 months, whether it's 3 months, you insert it here, ending and the date. You have your $3 signs for your 3 columns, and you start with your sales revenue, less returns, net sales. We have already gone through those things in great detail. You are supposed to be memorizing it. Okay, so every single time, if you have not started memorizing it as yet, you are starting now, because they do not give you this format in the exam. It is all from memory. So this is what you are going to be practicing, and you're going to start to do. Look back at some videos, because in the name of time, to go through everything again slowly when we have done it before, and there are videos, check out those videos again if you still don't know the income statement trading section, which is the top part, okay? So if you would remember, of course, your Form 4 book, when we first started this, you can break it up into sections very, very quickly. The first section, you're calculating net sales. Net sales would be the sales revenue less your return inwards. That will give you your net sales. Then the next one, the next section will be less cost of sales, where you start with your opening inventory, which is the one in the trial balance. And then you will add your purchases, but you may have to do some adjustments to get a net purchase. You would look in your trial balance to see if there's any returns outwards or purchases returns, and you would less it. And then any carriage inwards, and you would add it. Note once again, the calculation takes place in the first column so that all the working is clear. And then when you get your answer for your net purchases, then you are going to transfer it to the middle column. So net purchases, once again, is your purchases figure less your return outwards, add your carriage inwards, net purchases. So you finish that part, you're drawing a line because you now have opening inventory and net purchases. You're adding that, and the answer that you get is called your cost of goods available for sale. So that was, you go. Other calculations would be opening inventory, add net purchases, which is your cost of goods available for sale. And then finally, less your closing inventory. Lessing your inventory will give you your cost of sales. Remember, once again, where do you find your closing inventory? In the notes to the account or the additional information. Okay? Opening inventory in your trial balance, closing inventory in the notes or additional information. You less it, and that gives you your cost of sales figure, which is your end game or end results. This is what we were calculating. Note I had underlined it just so that you know it is a heading, not that it has a figure here. As I have said before, but I'm reminding you, when you put less cost of sales and you check your question, if they give you the figure already, you just simply put the figure underneath your net sales, less it, and you get your gross profit. But if they don't give you the figure, that is when I usually underline it just to show that it is a heading. And then we do the calculations, starting with your opening inventory, and then you're adding that to your net purchases after you've calculated it, less your closing inventory, you get your cost of sales. Note the brackets because it is less cost of sales. So you have it in brackets, and now you have your net sales less your cost of sales or cost of goods sold, and that will give you, as you see here, your gross profit or your gross loss if your cost of sales exceeds your net sales. Okay, if that happens and is a gross loss, you can just show it by having the brackets around it, as well as putting loss here instead of profit. And that's the first section, the one that you have to practice the most. Memorize, please, if you haven't started doing it as yet. All of these that you're doing, do not use the format. Get it wrong if you have to get it wrong, but you are working towards memorizing it. After we have done the trading section, we are going to go to the bottom section, which is your profit and loss. We start with our gross profit or our gross loss that we just worked out. And now we are going to add revenue. As I have stated before, you go to your question and you're going to identify your revenue and you're going to list it. But now we have some added adjustments, which is what we are going to go through now. So remember, once again, our 3 adjustments: accruals and prepayments, bad debts and provision for doubtful debts, and then there is depreciation. Okay, the dog in the back is agreeing with me. So what we have is we are now in the second section, and we are going to do certain things. This is the part where we are preparing the profit and loss section. And what you would see from your notes, you have to look out for your provision for bad debts. You have to look out for your revenue expenses and check for accruals and prepayments. And then you have to also make sure and put your bad debts, and then put your depreciation expense for each non-current asset. Okay, so here we have the profit and loss section. These are the items that we are going to look for, and these would be the working, therefore, that we need to do. So for example, provision, increase or decrease. Remember, we did this, so all of this is revision. The first thing you can do, or you should do, to know whether it is revenue or whether it is expense, is to calculate your increase or your decrease. Your current provision percentage by receivables. Remember, we did that. And if there is bad debts in the notes, you have to less the bad debts from your receivables before you find the percentage. Okay, so that is revision. We are going to apply that here now. So what I usually do is I calculate my current, I less my previous, which you find in the trial balance, and then that will give you your increase or decrease. If it is an increase, it will go under your expenses. However, if it is a decrease, you are going to put it under revenue. Okay, so you see why you should calculate it first, because you would need to know whether it goes here or not, rather than you reach all the way down here and you realize there is a decrease and you have to try and fit it in. Do your working first and then you will find out, okay? And then, of course, we have the accruals and prepayments, where we have just done that, where you check your, or you identify your revenue, like rent received, commissions received, discount received. If there's an accrual, you add it to the amount in the trial balance. If there's a prepayment, you minus it from the amount in the trial balance, and you put the answers in the middle column. Then the same thing for expenses. You identify your expense, you check in the notes or additional information. If there's an accrual, you add it to the amount in the trial balance. If there's a prepayment, you less it. Remember, sometimes they give you the incurred. That is what will go in the income statement. If they simply tell you what is the incurred, just put that figure in the income statement. Okay, or if they tell you a monthly amount and you have to work it out for the year, multiply that by 12. I suggest strongly you put the workings in the brackets, just like adding accruals and lessing prepayments. So then the last one can be the depreciation expense. Now, this is how I do it. I do it in this order, where the last thing that I do is my depreciation. If you want to get it done first, not a problem, as long as you make sure and account for your depreciation. So reminder again, depreciation is dependent on the method. There are two methods, the straight line method. If the question tells you, you would find that in the additional information. If they tell you straight line, you will calculate straight line, percentage by cost, or cost minus disposal value over estimated useful life. If you want, once again, I have sent links in terms of videos. The information is there in your books. You did a lot of activities with it. If you have to go back to review it, you go back and review it. But we are now applying it on the whole, okay? So, once again, it's the income statement we're dealing with and the profit and loss section. So, suggestion, you can take your little notes here. First thing, calculate your provision for doubtful debts. You are calculating your provision for doubtful debts or bad debts because you want to work out whether it's increased or decreased. So you calculate percentage by receivables and you compare it to or less the previous year's provision for doubtful debt, which you find in the trial balance. And if the one that we calculated is less, that means there was a decrease. And if it was more, that means it was an increase in the provision. So it's either revenue or expense. If it's a decrease, it goes under revenue. And if it is an increase, it goes under expense. Just remember as well, always put your bad debts. Whether it is in the trial balance or whether it is in the additional information, account for bad debts if you see bad debts. Okay, so this is what it would look like. You would see an increase in provision for doubtful debts and bad debts, or you may see a decrease in provision for doubtful debts and bad debts. Okay? And this is, remember this, notice decrease, increase, not total. The total provision does not go into your income statement. It goes into your balance sheet, which we are not focusing on now. All right, so this is your calculation for provision for doubtful debts. You're calculating increase or decrease, and you're putting it under the relevant heading, whether it's revenue or expense. Next, if it's revenue, you will put it underneath all your revenue. What I usually do is, once I've calculated, I know it's revenue, I then go back to identifying my revenue, or you can just put it in one time, decrease in provision, and that's the first thing. Now we are going to deal with all the other revenue or all the other expenses. So you will go and you will look at your trial balance and your additional information. In your trial balance, you're going to identify your expenses, and then you will check your notes. And if you see an accrual for whatever the expense and revenue is, so sorry, before you identify your expenses, you identify your revenue. Here we have rent received, commission received, discount received. You identify, you list it, you check in your additional information. And if there's an accrual, you will add it. If there's a prepayment, you would less it. Show your working. Okay, so you will have your open brackets, add accrual, or open brackets, less prepayment. What you're adding it to, the amount in the trial balance, rent received, what you're lessening it from, your commissions received, the amount in the trial balance. Okay? And then of course, make sure and have, if this is a decrease, you will see that here. And then for your expenses, it's the same thing. Trial balance, check your additional information, add accruals. You must show it. So this is how your income statement should look. You should see whether it's a decrease in provision or an increase. You should see working, open brackets, and some working. And then when we go on to the next one, I will show you again what you have to see. But see, this is how it looks. And then the last one is your depreciation. And as I said before, calculate your depreciation expense depending on the method stated in your additional information. If it is straight line percentage, they give you a percentage, it's percentage by cost. If they give you the formula, so they give you information for the formula, cost minus disposal value over estimated useful life, you find that amount, and that goes in the income statement. Depreciation expense, the name of the non-current assets, and then the amount under all of your other expenses. If it is reducing balance method for that particular non-current, percentage by net book value. Go back and revise that again. We did a lot of activities with it, but net book value is a cost minus accumulated depreciation. So you review that, you're going to be doing that. And the answer, once again, will go depreciation expense, whatever the name of the non-current asset is, and the amount. This is the income statement. Okay, so just remember, you have these things to do. You have to calculate your increase or decrease in provision for bad debts. You have to account for your accruals and your prepayments. And then you also have to calculate your depreciation expense for each non-current asset according to the method. And that's it for the income statement. You just add up all of your expenses and you less it from your gross profit minus your. Okay, so that is the income statement with adjustments. And that's it. So you can review this, you can review other videos, you can watch your book, but definitely you are going to practice, make your mistakes if you have to make your mistakes. And that's it for income statement with adjustments.